6 months ago, Boon Tee and I had a chat about our investment portfolio allocation.
Yep.
Today, we're going to revisit that discussion in a changing world. Inflation is going up. There is a war. Political uncertainty is much higher. Welcome back to Investing in Daren. Click subscribe to stay updated to more interviews like this. Boon Tee, can you give a short overview for our viewers who do not yet know you on what assets you invest in?
Thanks, Daren, for having me. So just a brief description is that I'm a long-term investor. I mainly invest in stocks, meaning that I look for business that has high quality and I just own them for the long term. Okay, my portfolio, I just give a very brief description, is that I invest in passive investment, for example, like S&P 500, and also some individual stock picks as well.
How do you feel right now as a retail investor?
Okay, I do see that right now, as a time of recording, this is a period that we can feel that there's some fear in the markets, right? Because if you compare to last year, where, okay, not just last year, maybe in the past 2 years, from 2020 to 2021, market just going up, right? There are new investors that just join the market, buy a couple of stocks and just see the stocks keep going up and up, right? So to them, it's like investing is so easy. But let's say if fast forward to this year, 2022, we can see that there's so many things happening, and we can feel that because of this Fed pulling out their liquidities, and market is already getting a bit nervous.
So for context, the Federal Reserve in the US is increasing interest rates because of rising inflation. Inflation's at a record high in the US right now.
Yep. Just this morning, Federal Reserve just announced that they will hike the interest rate by 25 basis points, and they are going to do that in the coming meetings, meaning that we are going to see close to 2% interest rate by end of the year.
For noobs like me, 25 basis points means 0.25%.
Yes.
Why does the industry use basis point and not 0.25%?
I actually don't know why, but I think these are just some term that is common in the finance industry. I don't know the reason actually.
So now you know who's the pro and who's the noob. So as a follow-up here, many people believe that we now transition from a bull market last year, when we were talking, to a bear market, like the honeymoon is suddenly over.
Yep.
What's your take?
My take is that, people always say, what happened in the past, let's say 2 or 3 months, right? It's just crazy, right? Market is so volatile. It could drop by, let's say, 2% in one day, suddenly just show a big grin to us, right? Smiling at us, right? This is so crazy for those who are new, right? But actually, I would say that it is years like 2020 and 2021 that is abnormal. This type of volatility that we are seeing in the past 3 months, right? I would say this is quite common before 2020, meaning that that's the period that Federal Reserve is not pumping liquidity to support the markets, right? So market is always volatile, but during that 2 periods, because of the COVID crisis and the central banks and also the government, they try to help the markets, right? They do all these kind of different measures, and hence the volatility is suppressed, and the market will just keep rallying regardless of the fundamentals of the business. So I would say that 2 years is like you mentioned, honeymoon, and now honeymoon has come to an end, and this is the normal period that we need to get used to.
So you just left the tutorial zone, you're now in the real battleground.
Yes, that's right.
Okay, there's a saying that from Warren Buffett, to be greedy when others are fearful, to be fearful when others are greedy.
Yep.
You are a long-term investor, so how does these words play out for you in your investment decisions?
Okay, I think for me, right, I don't invest, like I'm not a active investor, as in I read the news and then I have a sense of the market and then I just deploy money, buying here, selling there. I don't do that kind of things. For me, I have a systematic way of deploying my monies, meaning that, every month there's saving. I put my saving into the brokerage account, and then if I track across like different months, right, actually I try to like buy around the consistent amount every month. Because what I'm doing is that I want to like build a portfolio over time. It's not like trying to time the market or anything like that. It's all about the time in the market. So I think let's come back to the quote that you mentioned that Warren Buffett said, right? We have to be greedy when others are fearful. I think what he means is not like this type of small volatility that we are seeing here, for example, like 5-10% kind of volatility or dip in the markets, right? What he means is actually the period where there's really serious fear in the market. I think one good example is during COVID crisis. You know, because of the disruption from COVID, there are people that are losing their jobs, and if you are investing back then, as of March 2020, you will notice that there's real fear in the market. You can see that market dropped by 30%, and if there's no support from the government and central banks, right, highly likely we will see that the market will further continue to drop for another 10 or 20%. Okay, so that is the fear that he was mentioning. He's looking for this type of period because it is those periods that he can buy good quality assets at a very attractive price. But for the experience or in the past 2 or 3 months, this kind of couple of percentage volatility, right? I think this is just quite normal period, and the valuation as of now is still rather high actually.
So what I'm hearing right now, Boon Tee, is that what's happened in the past few months hasn't fundamentally changed your investing approach.
Yep.
How would you say then your investing philosophy has matured or evolved since our last chat 6 months ago?
I would say not much has changed in terms of the broad philosophy. It's still the same, like consistently buying into like good quality business. That is still the same. But let's say if we just look into the details in terms of the companies that have invested, individual companies, right? Of course, this will be more dynamics, and I need to like reassess and see whether my outlook on that specific company has changed or not. So I think that's the different between like the overall philosophy versus the outlook on single names.
And tell us more in a little bit more detail. What are maybe 3 to 5 things you look for now in a good quality business? What is it for you?
Good quality business, I would say, is those that we can see it compounds over time. So for example, okay, with all this tension that you talk about, right, we can just look at the situation in the markets, right?
Yeah.
For example, companies like Amazon, we can track their revenues, we can track their net incomes, right? And we can see whether their business is doing well or not. So that's why, as long as the revenue is still growing, and then the quality of the business and quality of the management, you can see from their decisions, right? I think I can say that they're still investable and they're still quality business. But there's also companies that maybe, let's say, we have seen some deterioration or some concern, and then hence we need to monitor it more closely.
So when you say companies that compound, are you looking at a particular floor of growth rate, like minimum of 30% year-on-year growth rate? What's that for you?
Not really. I would say that as long as they grow about the same rate as in the past, let's say, average of the past 3 years, right? I would say that that's quite good. Say for example, Apples, right? We have discussed Apples in the past, right? This is not a companies that grow at 40 or 50% every year, because they are, in terms of their revenue, is already quite high, right? So they're still growing, but in the past, let's say they are growing like 10 to 20%, right? As long as they can maintain at this speed, I would say that it is still intact. Yeah.
Okay. And so how has your portfolio changed 6 months ago? It's like, what companies have you added on more? What companies have you exited?
Well, I haven't really tabulated the calculations. I would say, okay, my approach, right? I buy into companies. To me, it's not a trade because I'm not looking to sell it within short period of time.
Yeah.
So after I buy, I will just keep it. If the business is doing well and then I still like the companies and I have my saving, I will just continue to buy, right?
Yeah.
So if I just look at the allocation and weightage, I would say that those that actually reduce are due to the price has collapsed.
Okay.
I have companies that, let's say, those are like large cap, but there's also some smaller cap, high growth names. For example, like Shopify, Twilio, these kind of companies. I know that the environment is very bad for companies, all these high growth companies, because they are not profit making at the moment, and their price has actually corrected quite significantly. And I haven't really added into these positions because I'm thinking that, okay, the environment has changed. There's no rush, right? Because as long as they are growing, I will still add over time, but I don't really need to add into the position every time they drop by 10%, this kind of approach, right? Yeah, it's all about position sizing, I would say.
So one thing I'm hearing is that you're just letting your portfolio grow or shrink just based on the natural movements.
Yes.
There is very little intentional exits. So you
Yes.
haven't really exited a stock, like you sold everything.
Yes, they are.
Okay.
I think just last month I sold my positions in Alibaba. The entire position is gone. So I think that's the only position. Okay, there's a couple of small ones also. For example, like Kuaishou. There are a couple of Kuaishou and also I can't remember the names. Quite. There are a couple of smaller names. For example, like Kuaishou.
Okay. Is this like a China market thing or it's a company specific thing for you to sell some of these stocks? What's it for you?
I would say that for Alibaba's, right, yes, there's a decisions that I took some time to really think about it, whether I want to expose. I know that there's a lot of bad news with regards to delistings, a lot of all this fear, right? But for Alibaba, you know, every time we heard about people investing in Alibaba, you can just ask, right, why are you investing in these companies?
Yes.
Actually, the most common answer that I have heard that is that the valuation is cheap.
Okay.
But for me personally, I don't invest in companies just because they are cheap. I want to look for companies that is really solid in terms of their business, their management, their fundamentals, right? For Alibaba, we do see that there are some concern with regards to the fundamentals of the business. For example, the most recent earnings report, we can see that there's already second quarter that they see some deterioration in the business. Some may say that this is associated with the slowdown in Chinese economy. I think that's true also. And the price actually corrected because of all these reasons, right? But for me, I'm asking myself, is this business that I really want to own over the long-term period? Or is it because I just want to own it because it's cheap and I'm not willing to take the loss, right? And I've come to a conclusion to say, okay, why not I just park the monies in other companies that I have more conviction on, and hence the decision.
Fair. Yeah. Some of my investments have also went down a lot. Like all my investments in genomics are now down like 65-70%. It's insane. And it's 2% of my portfolio, but still. What's your biggest holding right now?
My biggest holding is Apple.
Okay.
And I think they are not too different among the largest three holdings.
Okay.
It will be Apple, Microsoft, and Amazon. These three
Okay.
holdings, the big caps.
Okay.
Yeah.
US tech companies. And in our earlier videos, we also talked about your conviction on Amazon.
Yes.
So Amazon is now executing a 20-for-1 stock split. What does this mean for you as an investor?
Actually, for me, I think that stock split, right, is just something that don't change the fundamentals of the business. Essentially, stock split is just that, okay, you bought a cake, right? Instead of cutting it into, let's say, like 8 pieces, now you're cutting it into 16 pieces. The size of the cake won't change, doesn't matter how many cuts that how you cut the cakes, right? It's still the same size, right? So, back to Amazon, I would say that with this stock split, yes, there will be some impact with regards to the liquidity and access to smaller investor. That is true, and hence there will be some price reaction because of this news, right? I think that's real. But if you just study on the fundamental of the business, they are still the same. That's why to me, I'm quite indifferent. In fact, I will hope that the companies, at least the share price, stay relatively stable and not just shoot up, because I'm still at my accumulation phase, right? I still want to own more shares of Amazon. So it's good for me to, like, it doesn't shoot up too much.
Okay. Especially for long-term investors. Some long-term investors believe that stock splits are a lagging indicator of success. It's like how Usain Bolt isn't a great runner because he won Olympic medals. He was a great runner because of his innate abilities, his fundamentals, his skills. The medals was just an outcome to show for it. So when it comes to companies whose stock split, it's an indication that they're confident in their future.
Yeah,
Otherwise, why would they split the stock?
Yes.
So how will you view this then as a signal? Not necessarily as a change of fundamentals, but as a signal of strong fundamentals.
Yeah. I would say I don't focus on too much on these things because, if I'm focusing on this short-term development of stock split, right? What happened after this split, right? Because I want to be bullish on the factors that can sustain over long period of time. So for example, I'm a huge believer of their philosophy. So their philosophy is that we do the best to make sure that our customer is happy. Customer is always number one. This is a huge motto of Amazon, right? So as long as they keep this culture on delighting their customer, and they can do this years over years, right? I don't have to check every year whether they are still treating their customer well. So that's why I would say these are the attributes that that is a part of their culture and it could sustain over, let's say, decades ahead, right? But let's say come back to, like stock split, right? So they are going to announce a stock split and, it's 1 to 20 stock split.
Yes.
They will just do it once and we probably don't see it over the next, let's say, decade or so, right? So I can't expect these kind of things to be repeatable again and again, right? That's why I say I don't focus so much on these, these factors. If they do the split, it's not a negative per se, but it's also not a huge positive for me, at least for the factors that I'm looking at now.
How are you going to use your cash in the months ahead?
Yeah.
Can you tell us a little bit more?
Still the same, consistently allocate into my portfolio, buying the companies that I like. Maybe I will just increase a little bit more into like passive investment as well, because if I look at the weightage of my portfolio right now, still the allocation into individual names are much higher. So probably I will just buy some S&P 500, some QQQ, some Amazon shares, some Apple shares as well, some Tesla shares as well.
Okay.
Yeah, but this will take some time, so I will just allocate accordingly.
And how often do you buy? Like, do you buy monthly? Do you wait every couple of months? What's your strategy?
Yeah, compared to you, right? I observed that your purchase, sometimes you share on Twitters, right? For me, I'm more frequent actually. Like for example, I bought, let's say, every 2 weeks or so. But it's not like huge positions, right? I could be buying like $1,000 or $2,000, and then I'll just do that over consistently, I would say.
And lastly, what's one tip you would give for investors in at least the next few months in this current environment?
Yeah, I would say don't focus too much on the noise. And to do that, right, first you have to differentiate between what is important and what is noise. We are human, we are social animals, right? And our interaction is not just like reading news. Sometimes it's also like interacting with friends in chat group and so on, right? So I think with chat groups, you will see that there's so much information that's flowing as if everything is important, right? But I think sometimes it's good to take a step back and to ask yourself, actually, what is really important, right? Like if you just close your eyes and then just wake up, let's say 5 years later, how will the world looks like within that 5 years of time, right?
Yeah.
And then what kind of investment that you want to make now to really take the opportunities, right? I would say the most important and most basic one is actually just the time in the markets. So these 5 years, there could be some tension or some crisis over the next 12 months. Market can go up another 10 or 20%. But over 5 years and 10 years, it's unlikely that the business will just suffer and just go down to zero, right? Most likely, all these concerns that we are talking about, right, it will phase out, and then the business will grow, and the stock price will just create another all-time high.
Thank you, Boon Tee. So that's a take from a view of a long-term investor like Boon Tee. I also continue dollar cost average. For me, I'm mostly buying Tesla and Apple every few months, as you've seen in earlier videos. For long-term investors, as Boon Tee alluded to, we would probably think about, how do I make 5 important decisions in the next 5 years on investing? It shouldn't be that many decisions to buy or sell. I think what's fair to add on to that is we do keep a constant watch on the fundamentals of the companies that we invest in.
Yep.
If let's say Apple changes CEO, Amazon decides to divest a certain business, those are things that could fundamentally change your companies immediately.
Yes.
So it doesn't mean that when fundamentals change, we just hold on. We can act very quickly when fundamentals change. So I just want to call it out that long-term investors doesn't mean you just close everything and that's it.
Yep.
When business fundamentals change, revisit our investment portfolio.
Yeah, that's true.
With that, thank you for watching. If you'd like to see Boon Tee come back here again in 6 months' time to talk about how our portfolio has actually evolved over time, maybe we'll tell you the same thing. I'm still dollar cost averaging, buying the same companies. Click the like button and hit subscribe to stay updated to more interviews like this.
Yep.
Take care.